Next on our agenda, I will call on Dr. Jody Campiche, the Council's Vice President of Economics and Policy Analyst, to provide the economic report. Jody, we look forward to your report.
Okay, let's get this working here. All right, so good morning, and thank you for the opportunity to present the National Cotton Council's Economic Outlook for U.S. and international cotton markets. So while the presentation will focus on a few highlights, the full report will be available at the end of the session. So first, let's take a look at this past year. It can be characterized as a year with significant uncertainty and volatility in the global economy and the world cotton market. One of the most challenging issues facing the global cotton market is the uncertainty regarding the ongoing trade tensions between the U.S. and China. So as of early February, the two countries concluded a round of talks that was aimed at resolving the dispute. Further discussions were planned for mid-February. President Trump had set a date for March 1st, saying that if there was no resolution, increasing the tariffs would apply to about $200 billion worth of imports from China. So obviously this has a big impact on our outlook for this coming year. So as we looked at this, kind of the analysis was based on the positive statements resulting those recent negotiations. And again, there were some more statements that came out just in the last few days as well. Our assumption is that the additional tariffs being imposed by the two countries would be removed prior to the 2019 marketing year. So since the exact timing obviously is unknown, the ultimate resolution is assumed to not have a significant effect on the 2018 balance sheet. So that just kind of sets the stage as where we're going and what we're assuming for this projections. So in the first half of 2018, cotton futures prices trended upward, reaching a high of about 95 cents in mid-June. Cotton prices were at the highest level in 4 years and strengthened relative to competing crops. U.S. producers responded accordingly by increasing cotton acreage in 2018. And despite the political turmoil under the Trump administration, the expansion in the U.S. economy was continuing at a strong pace. Oil prices strengthened to $71 per barrel in July, and that was the highest level since November of 2014. However, following the announcement of the first tariff list by President Trump on June 14th, China immediately responded by announcing a 25% tariff on imports of selected U.S. goods, and of course that included cotton. So from June 12th to July 5th, we saw a decline in the nearby New York futures contract of 12 cents, so prices dropped down to 83 cents a pound. And cotton prices kind of bounced back and forth in August, but followed a downward trend throughout the rest of 2018. Oil prices remained relatively stable from July to November until sharply declining at the end of the year to about $57 a barrel. So as we review the latest estimates for the 2018 crop year, I think this year is a really good reminder that planted acreage is just one of the factors determining the supply of cotton and cottonseed. Various weather events, including drought, hurricanes, and harvest time rainfall, resulted in large disruptions to the 2000 growing and harvest season. So in the USDA report released yesterday, they increased planted acres by 57,000 to 14.1 million acres, and Texas accounted for 50,000 acres of that increase. So while planted acreage increased in 2018, the latest estimate, again released yesterday, was 18.4 million bales of production. That's 2.5 million bales lower than in 2017. So the changes were interesting as we look across the regions of the reductions that USDA made. The changes, basically reductions occurred in all regions except the Southeast. In Georgia, the estimate was actually increased by 50,000 bales. So as we look at planted acres across the region in 2018, in the Southwest, acreage increased to 8.6 million bales. That was the highest level since 1980. And with the exception of that 1980 crop year, the Southwest acreage has not been above 8.6 million acres since the 1950s. So the most recent level in recent years was 2011. It was about 8 million bales. So that was the latest acreage that was somewhat close. We had a large expansion in Oklahoma's acreage. We had a large expansion in Kansas acreage. Southeast increased acreage as well. And also the Mid-South increased acreage. However, as we look at production for 2018 compared to 2017, we saw much higher levels of abandonment in 2018. So of course, drought conditions in the Southwest, and then we had hurricanes, and then we also had frequent harvest time rains that just really plagued large areas of the cotton belt. So as we look at where we are right now, based on the latest USDA data, we have about 17.2 million bales classed through February 2nd. What we're seeing with the color grades for the 18 crop are definitely lower than they were in 2017. And in total for the cotton belt, 77% of the 2018 crop was grading 41 or better, as compared to about 88% in 2017. So for 2018, USDA is estimating meal use for the U.S. at 3.2 million bales. Now, this was a decline compared to where they were in the December estimates. So with the current marketing year, we began with cotton stocks at 4.3 million bales. Exports are estimated to be 15 million, and I'm going to go into a little more detail about U.S. exports later on in the presentation. Okay. So the most exciting part of the presentation, the projections for the 2019 marketing year, will begin with the outlook for U.S. production. So as in past years, of course, the prospects for the U.S. crop are based on the results of the NCC Planning Intention Survey, and we make assumptions for abandonment and yields. The surveys were distributed on December 15th. We collected responses through mid-January. We asked respondents to give their plantings of cotton, corn, soybeans, wheat, and other crops in 2018, and then their intended acreage for 2019. And once again, it's important to remember that the survey is a snapshot in time based on grower intentions, of course, at the time of the survey. So during the first half of the 2018 marketing year, the December 2019 futures contract was trading in about the 76 to 78 cent range. And some producers were able to lock in higher prices, even above that, for a portion of their expected 2019 crop. Then from December 21st to early February, prices have been locked into kind of the 72 to 74 cent range. But I want to point out, despite the recent drop in prices, if we look at prices now, and even during the survey period, compared to where they were a year ago, prices are really not that much different. They're only slightly lower than the levels a year ago. Now, what we've seen with other competing commodity prices is that corn prices declined throughout most of the 18 marketing year, but they have actually been improving in recent months. And as of early February, the December 19th contract for corn was at about 402 per bushel, and that's 12 cents higher than last year. Soybeans are actually trading lower than they were a year ago, maybe about 42 cents lower. So whenever we look at the ratios, we can basically see that the cotton to corn price ratio is lower in 2018. So the cotton to corn price ratio is 18.6. And it's lower because corn prices are higher. The cotton to soybean price ratio is higher than it was last year because soybean prices are lower. So what we generally see, and I'll go to the next slide and talk about that for a second. What we generally see with these ratios is that an increase in the ratio generally indicates an increase in cotton acreage. Now, looking at corn and soybeans this year, sometimes I don't put the soybean number up here on this chart because generally you see the same relationship with corn and with soybeans. It's a little bit different this year because we've seen an increase in corn prices. So what I expect this year is that we'll likely see more competition from corn And that will go for cotton and soybean acres. That will likely see more competition from corn acres this year. Now, I thought this was really interesting to point out. So as we approach the 2019 planting season, we can see that soil moisture levels are dramatically different than they were a year ago. I mean, it's pretty incredible to look at this chart. So I have been hearing that in recent weeks in the Southwest that some of the topsoil moisture is a little drier than it had been, but again, we're still in much better conditions going into the planting season. So I think, what we can get from that is that when we look at abandonment rates and whenever we look at the estimates going forward, obviously we expect abandonment rates to be lower this year than they were last year. Okay, so with that, let's start with the Southeast acreage. So one thing I want to point out is that in these tables, the 2018 acreage is based off of the December USDA report. We do know the report just came out yesterday. There are very minimal changes, but again, I just want you to know kind of what our starting point is on these tables is the December report. So in the Southeast, USDA did make a slight reduction in Florida's acreage for 2018, so that changes the percentage just a little bit. So the survey results indicate a 2.6% decrease in upland area to 2.8 million acres. All states except North Carolina and Virginia show a decline in acreage. In Alabama, the survey responses indicate a slight decrease in cotton acreage, as well as a reduction in corn, wheat, soybeans, and other crops. Florida respondents indicated that they'll plant less cotton and other crops, which would likely be peanuts. In Georgia, cotton acres is expected to decline by 3.6%. North Carolina, a 0.1% increase is expected in cotton acreage. And in North Carolina, acreage of corn and other crops is expected to increase, while soybean and wheat acres is expected to decline. So South Carolina, the acreage is expected to decline by 5.4%. And then in Virginia, we have a 3.5% increase in acreage. Okay, the Mid-South. Of course, in the Mid-South, we know that growers have always demonstrated their ability to adjust acreage based on market signals, and this year is no different. The Mid-South growers intend to plant 2.3 million acres, which will be an increase of 13.6% from the previous year. And the survey results suggest that the increase in cotton acres can be attributed to a shift away from soybeans. So across the region, we see that all states intend to increase cotton acreage, 14.4% in Arkansas. The largest percentage increase is in Louisiana with 22.2%. Mississippi, respondents expect to plant 18.4% more cotton. In Missouri, an increase of 6.9%. In Tennessee, an increase of 5.9%. And all states in the Mid-South intend to plant less soybeans in 2019. All Mid-South states except Louisiana expect to increase corn acreage in 2019 as well. All right, moving to the Southwest. So Southwest growers intend to plant 8.8 million acres of cotton, which would be an increase of 2.2%. Now, what I want to point out is that in the report yesterday, USDA did increase Texas acreage for 2018 by about 50,000. So if we go off of that number, it basically makes the percentage change. I think it's about 1.6%. So it doesn't do a lot, but it changes that percentage a bit. So Kansas growers intend to increase acreage by 3.4%. Oklahoma, an increase of 1%. Now, what I want to point out about Oklahoma in particular, and even Kansas as well, is that based on industry and producer feedback, I've definitely been hearing about larger potential increases in those states. Now, one thing that could help explain this is that we do have a lot of new cotton growers that are kind of coming into the mix that didn't grow cotton before. So a lot of those growers are not going to be, their acreage intentions are not going to be reflected on our survey because we didn't survey them before. So that is one explanation of what we've seen there. So overall, Texas acreage would increase, again, by these numbers, about 2.3%. So across the regions in Texas, South Texas indicated a 1.9% increase in cotton acreage. Respondents in the Blacklands indicated a decrease of 10.8% in cotton acreage. And then in West Texas, an increase of 2.9% in cotton acreage. So in the West, the intentions of 286,000 acres would represent a 2.9% increase. I want to point out the same thing on the West. There was a couple changes to the Arizona acreage and the California acreage for 2018 on the USDA report that came out yesterday. So when you look at the numbers compared to that, it makes those changes a little bit different. Overall, in the grand scheme of things, it doesn't make much of a difference because it's a very small amount of acreage shift. I think in New Mexico changed too, maybe by 1,000 acres. Okay, looking at ELS, California growers expect to plant 9.7% more ELS cotton, while Arizona growers expect to plant 19.9% ELS cotton in 2019. New Mexico and Texas growers expect to reduce ELS acreage by 1.4% and 10%. Okay, so now let's put it all together and look at total numbers. So we sum across the 4 regions. We get intended acreage for 2019 upland of 14.2 million, which is 2.8% above 2018. We add up ELS and upland, and we get a total of 14.5 million acres, which is 2.9%, again, higher, not much different than 2018. So based on the current prices of cotton and cottonseed, total revenue is still likely to fall short of total cost in some cases. We do know that the market facilitation program will provide some compensation to producers for the reduction in prices due to the trade disruptions. However, additional disaster assistance is still needed in the Southeast to help those growers recover from the hurricane losses. So the 2018 crop year has been a very challenging year for many growers across the Cotton Belt. Despite these challenges, though, cotton is still the better alternative for many growers. So when we look at current prices, projected cotton returns are currently more favorable than some competing commodities. We also look at improved seed varieties and the continued potential to have higher yields. So those are definitely factors that affect the increase in cotton acreage. In the West, the water availability may also influence cotton acreage decisions. So for this outlook, we generally assume yields in line with recent trends and abandonment consistent with historical averages. I diverted from that just a little bit this year because as we look at the soil moisture levels across the Cotton Belt, particularly in the Southwest, I did assume an abandonment rate for Texas and Oklahoma that was slightly lower than the recent 5-year average. So we make those adjustments, we get a total abandonment rate of 10.1% for the U.S. Harvested area totals 13 million acres. Use an average yield of 840 pounds. We get a U.S. upland crop of 21.9 and ELS crop of 782,000 to total 22.7 million. Now, you know, if we look at this past year, of course, we all have that fresh in our minds that the volatility around the projected production estimates can be very large given the uncertainty of weather patterns. So if we were to look at this acreage number, I think it could be likely that we could see a projected range of production in, you know, the 21 to 24 million bale range. So in the February report, USDA projected 2018 cottonseed production at 5.8 million tons. For 2019, the increased acreage, increased production, we're estimating 7 million tons, which would be the highest level since the 2006 marketing year. So with crush levels expected to remain relatively stable, around 1.8 to 1.9 million tons, remaining stocks will need to move into the feed and export markets. So the current marketing year, we began with 4.3 million bales of stocks. We add that to the recent harvest that's not actually all the way finished yet. We should have adequate supplies to meet our use estimate of 18.2 million. So I wanted to take a minute to talk about our cotton consumption and then our textile imports. So net domestic consumption is a measure of the size of the U.S. retail market. If it measures both cotton spun in the U.S. and cotton consumed through textile imports. So for 2018, net domestic consumption is estimated to be 18.3 million bale equivalents. For 2019, consumption is expected to increase slightly to 18.7 million bales. Now, what these charts show is how the share of imports from each country or region has changed in the last 10 years. China's share has remained relatively stable, while Bangladesh, India, and Vietnam have been the growth markets. So as you can see, if you take a look at basically the same colors apply to both charts, 1/3 of the gain in market share has come at the expense of the Western Hemisphere, while the remaining 2/3 is from other countries. So we are projecting mill use of cotton at 3.25 million bales for the 2019 marketing year, and that's slightly above the 2018 estimate of 3.2 million. So as the single largest user of U.S. cotton, U.S. mills continue to be critically important to the health of the cotton industry. And in the face of rising textile imports from Asian suppliers, the U.S. textile industry has focused on new investment and technology adoption in order to remain competitive. So again, I just wanted to follow up. We have 3.25 million in mill use, 22.72 in production. So let's look ahead to exports and what our export projections are for the coming year. So world trade is projected to be higher in the 2018 marketing year, but the trade dispute and increased competition from other major exporting countries has led to a decline in the U.S. market share. However, despite that decline, the U.S. will still remain the largest exporter in 2018. So prior to the implementation of the tariff, the U.S. was in a prime position to capitalize on the increase in Chinese cotton imports. In the absence of the tariff, we expected China to purchase about 3 million bales of U.S. cotton in the 2018 marketing year. With the imposition of the tariff, China has turned to other suppliers during the 2018 marketing year. The trade dispute has actually allowed Brazil, Australia, and some other countries to gain market share. So for the past decade, China has imported about 80% of raw cotton from the United States, Australia, Brazil, and India. So over the years, that market share has changed. But if we look at a comparison, I think we can look at Australia, Brazil, and the U.S. as being comparable since the cotton is machine picked and of higher quality. So just to compare kind of where we were in the last two marketing years and where we are now, the average market share of Chinese imports for the U.S., Australia, and Brazil was 45%, 20%, and 5%. So 45% of Chinese imports were from the U.S. Based on our latest data that goes from August to December, the share for the U.S. has dropped to 12%, Australia has increased to 40%, and Brazil has increased to 21%. Now, when you take a look at those other countries, particularly for Brazil and Australia, due to seasonality, sometimes their market share at this point in the marketing year is a little bit higher. But again, I think the data clearly indicates an increase in market share for Australia and Brazil and a decrease for the United States. So we're still expected to reach 15 million bales for the 2018 marketing year. And I think, despite reduced sales to two of our largest customers, and that would be China, and then that would also be Turkey, we have seen an increase in the sales pace in December. We don't have all of the export data yet that USDA hasn't released yet. We do have, we have been hearing that there have been more exports to particularly Pakistan, Turkey, and India over the last few weeks. The Turkish economy is stabilizing following the crash of their lira last year. So they are re-entering the export market. So that is good news for us. Turkey is generally one of our top customers. Usually they represent about 13% of our export volume. Currently, they're only representing about 4% of that volume. Now, the other thing I wanted to point out is that if we look at our current sales commitments and we take China out of that, we are still at the highest level of sales commitments at this point in the marketing year. We were very close last year, but we're slightly higher. So I think that's always important to look at, that, we talk about China, but actually we can take China out and we still are at a very high level commitments at this level. even with the reduction in Turkey, and then even with the reduction in some countries that are slowing their mill use. So if we assume a resolution to the U.S.-China trade dispute, China is expected to increase mill use to 41.4 million bales in 2019. Now, with a further reduction in their stocks for the 18 crop year, we are expecting their stocks for the 18 to go down to 32.4 million. We expect their imports to increase to 11.1 million bales in the 2019 crop year. So again, assuming a resolution, the U.S. is expected to export more cotton to China in the 19 marketing year and gain back some market share. China stocks are projected to fall to 28.2 million bales in 2019. And if that's realized, stocks would be down almost 40 million bales from their 2014 peak. So the gap between China's production and consumption is currently about 13 million bales. They filled that gap from 2015 to 2018 with reserve sales and a small level of imports. They have finally reduced their reserves down to what they consider a more normal or maintainable level. So I think this is great news going forward for cotton demand, for cotton imports, as they will need to increase imports to fill that gap. So for 2018, USDA is estimating 7.5 million bales of imports. I wanted to circle back to that for a second. They actually increased that number from the December estimate. One thing I'll point out is that based on the USDA estimates, current state reserves stocks are about 13 million bales. However, free stocks at this point in the marketing year are higher than they have been in recent years at about 18 to 20. So we add that 18 to 20 to 13. So as we look at additional projected imports for the 18 crop year, it's a little unclear whether or not China will actually import any more cotton, particularly to rotate out some of their reserves for 18, import more than that 7.5 million because they have such a high level of free stocks right now. But as we look ahead, we do expect production in China to remain relatively stable in that kind of 26 to 28 million bale range. So again, they continue to consume around 40 to 41 million bales. They will need to continue to increase imports. So as a result of the increase in imports, the U.S. is projected to export 17.4 million bales in 2019. If this is realized, it would be the second highest level of U.S. exports, second only to the 2005 marketing year. Even with increased exports, because of that higher production in 2019, stocks would increase to 6.1 million bales, which would be the highest since the 2008 marketing year. World cotton production is estimated to decline in 2018. Now, not only did the U.S. have major weather issues throughout the 2018 growing season, other countries in the world did as well. So India's crop was reduced. Australia harvested about 43% lower acreage in 2018 due to severe drought conditions. Pakistan's production was lower. Brazil's production was actually not lower. USDA actually increased that again in the report that came out yesterday. So their 19.1% increase in acreage actually helped offset some of those production losses. So as we look into 2019, production is expected to increase in most major cotton producing countries. So we're likely to see a large increase in acreage, not just in the not acreage as well, but particularly production, not just in the United States, but in the rest of the world as well. So production is estimated to be 125 million bales in 2019. World consumption is expected to be 123 million bales in the 2018 marketing year. And I did want to point this out because in the report that came out yesterday, USDA did lower consumption in most of the major cotton importing countries. And again, this is kind of due to the general slowdown in the world economy. And so, those estimates weren't that surprising yesterday. Now, as we look into 2019, we are expecting to see an increase in consumption. And again, I think part of this, our assumptions based on a resolution to the trade dispute, will help with that as well. But we need to keep in mind that all the projections are that the economy in the U.S. and in China and in the world are slowing. They're still growing, but the growth rate is actually slowing in the next year or two. So that will definitely impact consumption. So for For 2019, consumption is expected to be 126.5 million bales, so close to 3 million bales above 2018. Now, stocks outside of China, I want to point that out. Ending stocks are expected to go down by 1.3 million bales, so that would be ending stocks for the world. We know that China is going to have a further reduction in ending stocks of about 4.2 million bales. What that leaves us with is stocks outside of China, and they are projected to increase to a record 46 million bales in 2019. So as we think about that and look at where we are right now, I just want to point out that, cotton prices, we know that they've maintained a weaker appearance since August 2018, and that's due to the U.S.-China trade dispute, as well as a slowdown in the world economy. So based on the underlying assumptions and the resulting cotton balance sheet, the level of stocks outside of China in the 2018 marketing year, and then along with the increase in the 2019 marketing year, may contribute to a more bearish tone for cotton prices in the next year. However, the increase in world trade due to the higher Chinese imports, along with the projected resolution to the U.S. trade dispute, could definitely provide some price support. So as with any projections in the future, obviously there's lots of uncertainties, and particularly this year, there's many more uncertainties. A key factor, again, will be the resolution or not of the U.S.-China trade dispute and the 25% tariff on U.S. cotton. So China has reduced their reserve stocks and is expected to import more cotton in 2019. A continuation or escalation of the trade tensions will obviously have large impacts on the U.S. and the global balance sheet. If that happens, we do expect that the projected growth in China's mill use would not be as high. We actually think that mill use will probably decline slightly in the current marketing year as well. Decline slightly relative to the current marketing year. We think that Chinese imports would be a little bit lower. Obviously, we think that U.S. exports would also be lower as well. Now, I think what would happen is that, of course, China would import less from the U.S., but again, they're still going to import more cotton, so we think that they would be importing more cotton from other major cotton-producing countries. And if we take a look at who that might be, Brazil in particular appears poised to gain market share in China at the expense of the United States. So under a scenario with tariffs remaining in place, the projected expansion in world trade and the opportunity to backfill trade into other markets would allow U.S. exports in the 2019 marketing year to increase from 2018, but it wouldn't be the extent that we projected assuming the tariff resolution. So if we take a look at kind of where U.S. exports could be in the 2019 marketing year with the increase in Chinese imports, but with no tariff resolution, I think we might see exports in kind of the 16 to 16.5 million bale range instead of 17.4 that was projected. This would result in higher U.S. ending stocks as well. So of course, the impact of this trade dispute has great consequences. And if we kind of look longer term, if this continues, this could dramatically increase the likelihood of permanent losses in market share to China. But to end, what I want to point out is that, I think we've talked about a lot of the setbacks and some of the short-term challenges that have occurred in the past year, but as we look at the bigger picture, the global economy continues to expand and the population keeps growing. So world cotton consumption is trending upward as market share relative to other fibers has stabilized. World stocks are declining, and world production will eventually have to increase to keep up with consumption. Thank you.